to Punch Card Investing, a weekly show dedicated to all things value investing. Whether it be analyzing companies, pitching ideas, or discussing moves by the best investors in the world, we're trying to get one step closer to punching an investment off of our cards. Let's get started.
And we're back after a fruitful weekend in Omaha, meeting so many of you fine folks here in the Punch Card universe. We'll get back to that in a second. We'll see if we have some more people joining us. We're expecting at least one more, but we'll see. Otherwise, Tom and I will hold down the fort for now. Tom, you went to Berkshire yourself last year. I got to attend this year, so a lot to unpack, not only from what Warren Buffett and Charlie Munger have talked about during their Q&As, along with Greg Abel and Jane as well. There'll be a lot to unpack there, but we can also talk about compare maybe our experiences, because I know last year's a little strange with some of the travel restrictions and everything. It seems like everything's back in full force now. But before we get to that, let's go ahead and make sure that everyone watching or listening later on, be sure to smash the like button and subscribe if you haven't already, because we don't want you to miss future episodes. That would be a shame. And the best way to ensure that you don't miss those episodes is if you subscribe. Hit the bell icon if you want to know when we're going live and when these episodes post. We appreciate that as well. Always fun having the live chat going, and it was great meeting a lot of the folks who are active in the live chat, meeting them in an actual live chat. It was truly a live chat. So that was great. But yeah, so please do that. Check out the links in the description. Lots of good stuff down there, including the Discord. Be sure to look out for that. If you're not in that already, it's free to join. So please go ahead and do that. All righty, Tom. A lot to unpack. Berkshire weekend. It's a big, it's a holiday for us value investors. Or maybe at least the Berkshire annual meeting is very much a pilgrimage. You asked me on Twitter if I have joined the cult, and all I can say is we don't talk about that outside of the meeting, but it's very much like a convention for a bunch of value investors or investing nerds of all ages and from all walks of life and from all countries. It's a very international event, perhaps more so this year than last year because of travel restrictions being more lax this year, which was great. So I got to meet a lot of people from all over the world. But talk to me about last year's. What do you happen to know how many people were at that meeting? I want to say at least Buffett kept implying that they're breaking records on sales and everything during the event this year, which would make sense. Mm-hmm. But maybe that's just an inflation thing. But how was the attendance last year? Like, how much of that arena was filled?
Yeah, I think it was down a little bit on, I guess 2019, I suppose, would have been the previous in-person meeting, like pre-COVID. I think numbers were down on that a little bit. There were definitely quite a few empty seats around the arena. I'm fairly sure there was no China contingent the year I went, which is usually quite a big percentage of the people attending. It was still a very cool event. Like, we're lining up in the early hours of the morning. There's lots of surrounding events, before and after. And it was just kind of strange. Like, one of the reasons I started a YouTube channel a few years ago at this point is because no one wanted to talk to me about investing in real life. So I kind of spoke to the internet instead. And Berkshire's the complete opposite of that. Everyone's on the same page. Most people there obviously are very familiar with the long-term investment lessons of Buffett. And it's just a great place to meet people. And even that said, like, a lot of the conversations you end up having with people are often completely unrelated to investing. You can't just talk about life and business and other stuff, but it's a very cool place.
I concur with a lot of that. I think it's weird being in a place where pretty much everyone is talking about long-term. They're all asking like, oh, what podcast you listen to, what books you're reading. Like it's very much of the Buffett school of get educated, be patient, wait for the long-term, or go for the long-term focus. It's just very kind of jarring because I feel like outside of kind of what you're saying, outside of this YouTube circle, it can be kind of hard to find that. So being in a place where there's thousands of people all at once with a similar philosophy was pretty neat in that setting. Granted, some diversity of thought is always a nice thing to have. And there were a lot of differing opinions on certain approaches, but everyone was there to learn, it seemed like, at least for the most part. at least pretty much everyone that I met. So that was really really not reassuring, but it's just a good thing. And I enjoyed my time there too. What events did you go to last year? I know you went to the Peterson barbecue. I did not go to that one. That's on Thursday. I didn't come until Friday. But you had quite the trip when you came along. But what other events did you go to outside of it?
Yeah, I'm just trying to remember. I think we had the Peterson barbecue. I think was the first proper event we went to. I mean, it's fairly relaxed setting, like
Yeah,
but it was a cool
a
event to
lot
go
of them
to.
are pretty relaxed. Yeah, from what I
Yeah,
saw.
yeah. I think we did that on the Thursday. Guy Spear and William Green had a meet and greet. That may have also been on the Thursday. I can't quite remember whether that was Thursday or
Yeah,
Friday.
that's right.
Went along to that. I had the Aquamarine Fund dinner on the Friday night, which Guy kindly invited me to, so that was very cool.
Nice
Berkshire
folks.
meeting, obviously, early hours of the morning on Saturday. I did go to the Value After Hours meetup, so with Toby Carlisle, Bill Brewster, Jack Taylor, that crew.
I saw him walking around, Toby Carlisle.
Cool.
I saw him at the Markel meeting for briefly, just kind of wandering around.
Yeah, I saw lots of people getting photos with Toby on Twitter, so that was cool.
Yeah.
What else? And then I think the last one was probably the Markel meeting on the Sunday morning. I think
I went to that one as well.
That was the final event. Yeah.
Yeah.
Did they have the bagels this year at the Markel meeting?
I don't.
Bagels
It was like breakfast sandwiches, I think. Bagel sandwiches.
Nice.
I don't know if it's the same thing, but yeah, it was fine for like a free breakfast. Like, sure, thanks.
Yeah, for sure.
And
and Tom Gainer's good value. Excuse the pun.
Yeah, I started. It was funny because I went to the Markel meeting as well. That's the Sunday after, and I knew a lot of our punch card audience was going to be there. At least the folks I met at the meetup on Friday. We could talk about that in just a second. But I only got to sit in the meeting for like 10, 15 minutes before I kind of got pulled out because people wanted to talk. Like so, so I only caught the first part of it. But it was great though, just to meet a bunch of people that I hadn't met on the Friday, or I didn't really have much of a chance to talk with on Friday and Saturday. So that was it was a very good meeting, and it was well attended too. It was at least a few hundred people. And this is just like the Sunday after. It's a side event, it's a side show. And you can get some pretty large events going. I know the Value X one is huge too, right? Is that the one you mentioned last that you went to with?
I don't think there was a Value X Omaha last year. I think this was the first year that happened. Could be wrong there, but
I see. Well, I
imagine they just had Guy and William Green just had like a general meet and greet at a restaurant bar kind of thing.
I imagine it's a lot of overlap in the attendance, but but yeah. So yeah, I didn't appreciate how many events there are on Thursday. There's quite a few people try to pack it in. Then I know our friends at KPG, Brett Kelly had an event on Thursday as well. There's quite a few Friday events, but we were holding our own. Speaking of which, that went quite well. The first ever punch card meetup, and it's very reassuring that we can, we have some nice momentum heading into whatever events we do in the future. I think doing something like this annually would be great, since so many people come to the Berkshire event because it's a meeting of a lot of like-minded folks and a lot of interesting folks. So it'd be really great to do something like that again. But just to kind of recap the meetup we had on Friday, keeping in mind the annual meeting itself is on Saturday. So the day before, we met at a restaurant in downtown Omaha, and when I hopped on my flight on Friday, we had about 32 people who had RSVP'd that they were coming. And then by the time I landed, it had jumped to like 38. So I was like, oh, great. And I want to say we had about 40 people cycle through the event, since most of those people did come and a few didn't. But then a few people brought others who hadn't RSVP'd that they had just met that day. So that was really cool, getting some people to kind of get looped into the punch card empire. So it was very, very well attended. Frankly, when I was putting together like the reservation and stuff, I was thinking, well, if we get 10 to 20, that would be really great. And it would have been, and we ended up blasting past that, which is awesome. And a lot of good conversations out of that, a lot of good food for thought, and then just good company in general. Everyone's very positive at the event. Energy was high, so it was really good for that. So looking to next year, a lot of people were asking where you were, Tom. I was like, hey, just had a baby. He was here last year. I'm holding the fort this year. Next year, I think we'll have more people. I know you said you're probably going to be coming, right?
Yeah, I'm just sort of putting that out into the social media universe to force
Pressure.
myself to go. But no, I had serious FOMO this year, just like seeing all the pictures and things come out of it.
Yeah, I did last year, so you're feeling what I felt. So, but I think next year it would be really great if we can do something maybe a bit more formal for like a formal meetup. Maybe we have some sort of I don't know, a mini lecture makes any sense, or something like that, some sort of presentation or even like an interview with someone that could be really cool. That followed by kind of a more casual breakout, and then maybe doing another casual meetup on Sunday or something for just to hang out, like a happy hour sort of thing. I ended up doing that on Sunday this year. I went to the Investors Podcast Network. I guess I'm told they had a few meetings over the weekend, but I went to the one on Sunday, and it's probably about 60 people there, 50, 60 people, maybe less, but it felt like a lot. It was a pretty small space, but it was very full. But that was a great meetup too. So, and that was just on the Sunday after many people leave on that Sunday morning. It could be something we do like a formal thing on Friday and then a more casual thing on Sunday. Or, I mean, both would be casual enough for anyone to attend. But either way, it was very great to see the turnout we had, the support we had. And it seemed like people would like to do something like that again. If I read that wrong, you folks let us know in the comments. But it seemed like it was overall a successful event. So really happy that happened, that it came together. Now all we got to do is get some more people to come next year, and it'll just keep compounding from there, right?
Yeah, it's very cool. I mean, like, what's I don't know how many views we get on the average punch card stream, maybe a couple thousand or so.
Yeah, a couple thousand.
So to have like 40 people there in a
in person
meeting where only one of us actually bothered to go or ended up making it. It's very cool.
Yeah, I mean, I totally agree. It was a better turnout than I would have imagined. So it was really cool. Nothing bad to say about it. Always something to improve on, of course, but it was overall very positive. So thank you everyone who attended. Made it very worthwhile. So we'll be sure to have something next year as well. So if you have any feedback for what you might like to see next year, definitely let us know. We can start putting things into consideration. But for now we can just take a nice break until the next meetup. Ideally, like long term, you can have more meetups throughout the year in certain places. But I feel like the attendance at that place is going to be about as high as we could possibly get it, given our niche. So definitely want to take advantage of that. It's a good chance to meet a lot of interesting people. Got an interesting audience, Tom.
Yeah, we've got a few of the people in the chat that it looks like you met in Omaha. Unfortunately, Jonathan didn't see you.
There's some people who couldn't make the Friday, but I'm sure you felt this way too. But it was kind of weird to be like recognized by quite a few people just from the punch card stuff, which is cool. But it's just weird when like a stranger's like, hey Jack, I watch Punch Card or watch your stuff or whatever. It's like, awesome, thank you. But it's weird because they're coming in knowing more about you than you know about them by probably quite a bit. Like it's cool, and I don't know about nerve-wracking, but it's just a weird feeling because it's unusual. But there's quite a bit of that on the Saturday as well when I was just walking around the arena trying to find a seat because it was packed. But it's still very, very cool. It's reassuring that we're getting good reach here on Punch Card for that audience. So
Yeah.
So thank you to those people as well.
Yeah, it's very cool. Same experience for me last year. Lots of people came up and said hi, and it's very cool. Like everyone's exceptionally nice.
Yeah.
But it's just like kind of a strange feeling, you know. Like
Well,
because
it's not natural for
it's
someone to know quite a bit about you before ever meeting you in person. It's just not how we're wired, I guess.
Yeah, for sure. But
Yeah.
no, hopefully a few more of the crew will be there next year.
Yeah, and now I've met some folks who watch our stuff regularly, and have some relationships going there now, and those can get deeper, make some new ones next time. So it's all good stuff. It does make a big difference when you can get out there in person and meet people, as you're well aware. I mean, it's made it's a bit of a perspective change as well, and when you can put a face to the name, like a real face, not just a computerized image. But yeah. But yes, there are some folks in the chat here. My man Justin. It's a funny story here. I was hanging out with Patrick Holden. He's the part-time investing. He has a channel called Part-Time Investing. Talks about microcaps. Good channel. I'd recommend checking it out. Mainly about microcaps, I should say, but definitely is in our kind of camp of value investing. But he met this guy Justin, shown on the screen now, who was he was a Uber driver, and somehow they were talking, and Justin runs a home renovation business in Omaha, so they were talking business, and Patrick said, "Hey, I'm going to Berkshire meeting," and one thing led to another, and he kind of got roped in with us on Saturday, attended the meeting, and drove us around Omaha, and like he's a real nice guy. And we were talking business, talking investing, and it's just cool that I get to meet, like, very spontaneous to meet someone, and Justin and Justin's wife as well, very, very kind to us. We very much appreciate it, and made the experience on Saturday. We spent pretty much the whole day together. Quite a bit better, since kind of had like a local plug to get around and know where to go. So it's completely unnecessary, but super appreciated. So thank you, Justin, and thank you, Patrick, as well. We all had a good time on Saturday. And then one thing I forgot to mention on Friday. You probably didn't have many travel problems. I know it was a different traveling era, so but you didn't have any delays or anything, right? Or when you were getting over
it just
here?
lasted 30 hours.
Just
was the only problem.
I met a ton of Australians and New Zealanders. Like it was quite a few. I was surprised. I think at least at the Punch Card event, we had a massive overrepresentation of Canadians and Australians. Like there was just a lot relative to the what our audience proportion is, if I'm not mistaken. But we do have a very worldwide audience, so it was just kind of amazing given the trip from Australia that it takes. But anyways, on Friday I had some travel issues, but I subconsciously punched in. There are two airports, larger airports here in Houston. I subconsciously punched in the incorrect one onto Uber, so I was going to the wrong one. I was 3/4 of the way there. And I realized, oh no, I'm going to the wrong airport. So I changed my route on Uber, which I didn't know you could do in the middle of it. And we have to get to the other airport. So it's Bush and Hobby are the two airports. So I was going to Bush. That's the wrong one. Had to go to Hobby. And then Hobby was like 35 minutes away from Bush, or from where I was. So we get down there, and by then I missed my flight. So I'm like, oh my God, I don't know what I'm going to do now, because like all these flights are basically full. So I'm searching. The best thing I can do at Hobby is to connect to Atlanta, then go to Omaha, and I'm getting there at 6 p.m. The event starts at 6. I can't do that. So I'm like freaking out, and I find that there's one direct flight out of Bush, the other airport, at like noon or something, which was boarding in the next like hour. But I'm 35 minutes away, so I bought another Uber, zipped all the way up to Bush, I got the flight. I got my my hobby flight refunded because I used points, thankfully. So, anyways, I barely made it. I spent like $100 on Ubers that on Friday just to make it. But man, that was a very stressful morning because I thought I was gonna leave all these people hanging. But woof, I'm never. I don't think I'll make that mistake again. Just subconsciously punching in the wrong airport. I'll be very
Yeah,
thorough
man.
next time. But
Yeah.
yeah, that was a fun one. So I was telling some folks about that, and some people commented on Twitter. So that's what that's about.
Yeah,
But
close call. Okay.
yeah, very close call. Very close call.
Yeah.
For my American friends, get TSA pre-check. I would not have been able to do that if I didn't have that. They'd basically blow right through security most of the time, and you have to pay like $75 for, and that's good for 5 years. But I'm a huge proponent of that. If you fly any more than like twice in 5 years, get it because you'll save hours of not having to go through security. Different for international. You can get an international one, but I don't know. I didn't get that one. I don't do that much international flying. But anyways, those are my travel shenanigans on Friday. And it all ended up working out well, but it was just stressful.
Yeah.
And then I left on Monday night, and all was well there. Overall though, very good weekend. We've just been talking about the trip. I guess we should probably talk a bit about the substance of what they
Yes.
talked about at this said meeting that 30,000 people came to, or however many came. I don't even know. But that whole arena was basically packed. You mentioned that there were some empty seats for the first act. The first few hours, it was completely full. Second act was about 2/3 full, which is still very full, many thousands of people. But it was a packed house for the actual annual meeting itself. Really more for the Q&A session. That I think they went like 6 hours or 5 hours, 5 or 6 hours of Q&A over 2 sessions, and just want to point that out for the record. That is Buffett 93, or is he 92?
92 and Munger's 99.
Yeah, he's 92, and I know Munger's 99. And they're up there for 5-6 hours. I remember you noting this last year as well. They're just up there fielding questions and giving legitimate answers like for such a long. That's hard for anyone to do, let alone someone who's getting that old. So it's just amazing.
Yeah, they've got like Coke and peanut brittle.
As
they're
they're inhaling candy and syrup.
Yep.
Yeah, good point. So that was impressive in itself. But to the actual substance of the questions, I don't know if you had any key takeaways. I mean, there's a lot to unpack. A lot of it is kind of the timeless investing wisdom, but I don't have my notes in front of me that I took during it. But I think we both did breakdown videos on kind of our highlights. But any of your favorite moments from it that you can think of?
Yeah, I think there were a few themes that were kind of expected, like a lot of talk about the banking sector and how Buffett and Munger think about bank investments, and that they actually used to own a bank back in the late 1960s, I think.
Charlie seemed very upset that they weren't allowed to own it after without. He seemed upset when they were kind of boxed out of it.
He was pissed, and he was he kind of like lit up when he was talking about the operations of the bank, and we never had an unnecessary cost. We never had any risk of to the FDIC or whatever, and that was interesting. Berkshire could have been quite different, I guess.
I think if I remember correctly, he said like we'd probably own a bunch of banks, right? Didn't he say something? I feel like someone said something like that. Yeah,
I've got the numbers here somewhere. 1969, they had $19 million invested in banking versus 17 million in insurance. Yeah, I mean that's like in the first few years of Berkshire, so pretty small sums relative to what they're working with today. But
you wonder if it would just steer away from insurance more into banking, but regulations would have it. So
I guess lots to chat about that. It was interesting just to get some insight into Berkshire's operations. They released their first quarter earnings kind of going into the weekend, and Buffett gave us a bit of commentary on that. Yeah, a little bit on their oil investments. He kind of shot down some rumors about Berkshire potentially buying Occidental out entirely. It sounds like they're keen. They're happy to just be kind of passive owners in the business, I suppose. Little bit on Activision Blizzard was kind of one of my highlights, and then one of the things I also covered in the breakdown video I did was on their insurance operations, and specifically some of the reinsurance business that I've been doing recently. I really haven't seen a lot of people talk about that, but I found that quite interesting.
Yeah,
well.
yeah, same here. Back to the oil thing. Charlie mentioned that he had the. I wonder. Part of me wants to say he's exaggerating, but then again, probably not because it's been so long. He said he made a $1,000 investment
royalty?
into into his oil stock like before Berkshire, and now it pays like a $70,000 dividend or whatever. Something ridiculous like that per year on his $1,000 initial investment. Just
I don't know. I don't really know how those old oil royalty arrangements work, but
one of them
that's one very long-lived oil well or whatever's going on there.
Conglomerate of wells, maybe. But yeah, either way, that's pretty wild.
It's crazy. I mean, $1,000 is a lot of money back in before Buffett and Munger met, but the sounds of it. But
well, yeah, but even now, 77 times yield on cost, which is crazy.
You just got to wait till you're 99.
Yeah, you just got to hold for a lifetime, literally. That's remember Buffett mentioned that in the annual letter. It's like time, kind of mentioned time, sort of offhand, but like when you can do this for a long time, you have a big advantage because things can compound, and I think that tends to be a bit underappreciated. When they were kind of kicking off the meeting, when they kick off the meeting, they play this kind of, I don't want to call it a promotional video. It's like part promotion, part skits, part whatever that they want to do like before the annual meeting, and they don't publish it. But in that promo video, they pulled a few highlights of like each year they were being asked, so when are you going to think about secession and like who's going to take over the business? What happens if one of you retires or dies or and it was all the way back to like 1991, 92, 93. They were just showing every year for a few years. And that's literally 30 years ago now that they were being asked about this, and they're still at the helm. And Buffett mentions that like they got a pretty good question about I think the hardest part, what's the hardest part of their job? And Buffett was like, there's no hardest part. It's all great. Like I love my job. I know what to expect every day. And part of me, when I hear that from like a CEO, I always kind of write it off. It's like, they're just saying that to be political and, and be friendly to everyone. But he's living it like he has no reason that he has to do it. He's 99 and with all the money he could like possibly imagine, yet he still continues to choose to live out his days this way. And maybe it's because he doesn't know anything else, but it's also probably he's telling the truth that he actually loves it. Otherwise he wouldn't be doing it, I would think. But that was a bit of a tangent there. Back to some other questions. Any other big highlights there?
Well, those were the main ones that I just kind of ran through quickly there. I'm not sure if there's any you want to go into in a bit more detail. I
wish I had my notes in front of me, but just one quick funny one that my favorite line of the whole meeting was an attorney, I think from Guadalajara or something from Mexico, was like, Charlie Munger, do you have any advice for young attorneys? Who I think the question had to do with like who would be like corporate counsel for Berkshire or something. And Charlie didn't have much to actually say about it, but he said, I have a son-in-law and who says that modern practice at a large law firm is like a pie eating contest where the winner gets to eat more pie. Which is great. I'm making a video on that very, very point. And
I did think of you when he said that.
Oh yeah, I was like, dang, that it's quite it's true in a lot of cases. But you could say it's true for a lot of big companies in general. It's not just a law thing, but that was a great one. And his word of wisdom was, there's more to life than just eating pie, and and be careful like taking a job like that. That was his advice on the practice of law.
Yeah.
For big law, watch out for those firms.
Fair enough.
So,
I mean, to be fair, Charlie hasn't actually been a lawyer for
from
a
the
very,
60s,
very long
since
time.
the 60s, in which they mentioned, but still valid. Good analogy. Okay.
Yeah, I mean, his original law firm is still Berkshire's counsel, or whatever you call it, right?
Is it?
Munger Tolls, I think, is the law firm.
I didn't even realize that.
Yeah.
Impressive. So he must still have his license. Paying the dues all those years.
Yeah.
Keeping up with the continuing legal education credits.
Yeah. Actually, someone in the comments might be able to fact check that for us, but I'm pretty sure.
Yeah,
that's right.
I wouldn't be too surprised, but yeah. Anyways, so that was my favorite line, but not all that valuable, just funny. Charlie always making people laugh just with his blunt delivery, like whatever he's saying, like people tend to laugh just because of how he's saying it, and just how he just doesn't care. Another point was this was like a weird point on like using NetJets. Like Buffett was kind of fumbling his words and was saying that because he was talking about like any dollars that you spend are dollars that can't be spent by your beneficiaries or whoever's getting all of the inheritance or getting all the money when you die. And a lot of his is going to various foundations. And he's kind of like, well, yeah, I still use NetJets because, like, it's just, he's kind of implying it's one less dollar for like the foundation of waste. It was kind of what he was insinuating. He didn't say it like that, but anyways, it pivoted to Charlie, and he was like, yeah, I like flying coach, and because like when I used to fly coach, I kept doing it because when I go into the back, people would clap for me.
It's so funny.
Just so unashamed. I love it.
That's pretty hilarious.
That was great. They did talk quite a bit about inheritance. I'd love to get your thoughts on this, Tom. And like how it's a lot more complicated than just giving people money or giving people control of a business, especially when it comes to your kids. Buffett said that like you always want to have anyone who's on the will review and kind of approve it beforehand, so that at least they know what's coming, which makes sense. I was kind of expecting him to say something more about how like, giving people money isn't effective. You really got to teach them values. But they didn't say that. It was more like, just make sure they're in on it.
They have said that a lot in the past.
Yeah. I'm not as familiar with that. I haven't heard it before. I've heard it from some other rich guys, but what have they said before?
Well, I think Buffett has basically said, why should, basically why should his kids get a head start in this race just because he's done well?
That's what I was expecting him to say, but he didn't here. It was kind of odd.
But at the same time, I mean, I don't recall the exact numbers off the top of my head, but he did seem to significantly loosen up on that stance as he got older. Like if you read the Snowball, it's got some numbers and stuff in there, but he did start getting to the point where he would like give his children $1 million gifts at Christmas and stuff like that.
Sure. Yeah. Oh, I think we've talked about it before, but Bill Ackman Bill Ackman's dad, I should say, had an interesting perspective that I kind of like. It's that I'll only give you money if you don't need it. Implying that, if you want it for charity or you're already well off, then sure, I can give you money because it's not going to corrupt you, is kind of what he's getting at. So I kind of like that. So maybe it's something like that once your kids are, well, I mean, his kids are old now. His kids are in their 60s. So like, he can, money for them now is going to be less corrupting, if you will, than if they were 25 or 20 or 18. I would think.
Yeah.
Maybe it's a bit of that, but yeah, it's also kind of tough
Yeah.
to maintain that discipline for that long.
Yeah, and I think most of Buffett's kids are running large charities these days that
Mhm.
have been funded by Berkshire shares.
Yeah. So it's
So
probably
it's kind of it's a pretty cool thing to be able to do.
yeah, absolutely. So yeah, so yeah, they'd spent a good amount of time on that. They got a couple questions about it. So yeah. Any other? I'm trying to think off the top of my head. Again, I wish I had my notes, but
Well, I can go through some of the things I sort of found interesting.
yeah, let's do it.
I mean, Buffett started the whole meeting out going through just some of the basic figures for Berkshire and I guess how he thinks about different aspects of the business. I found that kind of interesting. So operating earnings.
So, what do you find interesting?
Oh, sure. Just how he thinks about float, for example. Some of the changes around like they're just idle cash that sits in short-term treasuries actually making some money now. I mean,
billions.
in nominal terms, at least, it's there's a fair bit of inflation eating at some
Well,
of those yields.
sure,
But
sure. It's a lot better than zero, though.
but yeah, I mean, just to go through some of those things, like Berkshire's operating earnings for the quarter were rounding here, but 8.1 billion versus about 7.2 billion in the same quarter last year. Interestingly, he did say most of our businesses will report lower earnings this year, but the insurance businesses seem to be kind of pulling some of those figures up. Like we were getting at, the short-term treasuries, which basically I just interpret as cash that Buffett could invest if he wants to, have gone from earning $50 million a year to $5 billion a year with pretty minimal change in the actual amount of cash.
Yep.
He kind of went on to say operating earnings, have grown a lot, obviously at Berkshire over the years, and they'll continue to grow. And it's largely because of retained earnings. Like Berkshire famously doesn't pay a dividend. They keep reinvesting in stocks or acquired new businesses and so on. He even said he paid a 10-cent dividend in 1967, which he said was a terrible mistake.
Yeah, so, him and Munger were just loathing, like, oh, why did we pay that dividend?
I should do the maths on what
would it compounded at?
What 10 cents of book value would have grown to today. Probably something insane. I wouldn't be surprised if it's like a few $1,000s an A share or something. That would have turned into.
Sure, why not? $1,000,000% return or whatever it was.
And just the last bit, I guess, on Berkshire's just first quarter results. Float is up to $165 billion now. It's money that's not ours, but that we can have working for us. It's a valuable asset that shows up as a liability, somewhat akin to a bank deposit, but importantly different. It can't disappear overnight. And it's cost them less than nothing, which he's essentially saying Berkshire's insurance businesses have produced an underwriting profit and they get the advantage of using the float as well. So it's kind of akin to borrowing money at negative rates.
Right. I was going to point out that line where he said it's an asset that shows up on liabilities, which is an interesting way to think of it. And it doesn't make sense given how they deploy it. But yeah, he was like, it's better than debt, better than equity, raising equity. Because of those reasons you just said. It reminds me kind of those 0% Japanese bonds, but a little bit better because they're not.
That's better, yeah.
There's no actual payments to make, no outflows. No regular outflows, I should say. But yeah.
Yeah. It's quite interesting. Like I think one of the reasons the float and the reinsurance kind of bit of the meeting caught my eye this year is I've been reading through some of the Buffett letters again recently. I'm kind of in the late 90s at the moment, but there's a lot of talk about this exact concept, and I should try and pull up the actual numbers because Buffett talks a lot in there about the actual kind of insurance business. And
while you pull that up, speaking of reading old annual letters, I made a note of it in my breakdown video, but Buffett casually mentioned that he was reading the 1932 GM annual report, which just like This guy's just casually reading like 1930s automotive annual reports.
Yeah.
Just shows you that he's like dedicated to the craft. Um, um, Clearly loves business.
Yeah, I
No,
know.
the reason
It's
you'd be looking at that
bananas.
in your free time as a 92-year-old.
Yeah.
So,
Have you got my screen there, Jack?
yes.
So this is from the 1995 annual letter, which is essentially, well, you can see the figures here, but this is their float growth over the years. You can't see my mouse there, but that column that ends in like 3.6 billion.
Yeah.
Actually, what did they just say in the last annual meeting? It's 165 billion. So even since 1995,
Well,
it's
yeah,
gone from
that's
three and
actually
a
that's not that crazy for a timeline. Yeah,
yeah, I
that's a
know
massive growth.
that's insane. But I guess this is the way Buffett was thinking about the insurance businesses. So they produced underwriting profit in some of these years. Some years they had an underwriting loss. So I think this is the combined ratio they're showing here. So yeah, basically a figure north of 100% on a combined ratio means they made an underwriting loss. I think that's what that's saying. Actually, sorry, that's the underwriting loss in millions. That's not the combined ratio. But anyhow, approximate cost of funds. This is kind of the whole point of the use of
Yeah, the
float.
less than zero all those days, all
Yeah,
those
less
years.
than zero in some years versus if they were able to borrow money at government bond type yields.
Right.
That's kind of the comparison. So some years they're above that, like in the 80s here when their insurance businesses were struggling. 19% effectively, which isn't great at all, versus 11 in treasuries. But
Well, it's
yeah,
like if you have all those years of zero, you're theoretically making a positive return on that, and then you can make it through those tough years pretty easily.
yeah, and
Yeah.
I mean, Buffett's turning around and investing this money at like, I don't know, 20% a year or something.
Yeah,
So,
consistently, right.
yeah,
Um,
yeah.
was it, or would it have been higher back then? 60s, 70s, 80s? It's probably higher than 20% now.
It's probably right at the top of this letter.
Yeah.
Book value had compounded at 23.6% annually since
So yeah,
the mid 60s.
a little bit higher.
But part of that is because they've got this float as leverage. So the return that's been generated on the assets wouldn't necessarily be that high. It's just they've got the use of float.
Sure. So
It
it's a
grows the
levered
equity at a
return.
faster rate. Yeah.
Yeah. It's sort of levered return.
Yeah. So there you go.
Yeah, they kicked off the conversation talking about float, and back to kind of the cash usage when they're talking about how the dividend was horrifying. They got some questions kind of about deploying cash and all that, and Buffett especially like doubled down on how the preference always is to buy great businesses, and then after that, if depending on where Berkshire's trading, it would be to buy Berkshire, which you could call buying a great business as well. It's just it's their own business, but that's always their preference. Never want to do dividends. It's one of those two things that they prefer, but always first being buying great businesses at least a decent price. So that, and rather than doing a dividend or something like that, a massive return to shareholders. They got a funny question about corporate raiders taking over. I assume to like somehow get to the cash, but I don't know what raider is big enough to actually take that big of a share. And
like Vanguard or something.
Yeah, right,
Yeah.
right. There'd have to be some massive mismanagement to get it down to like a corporate raider price if there was that much cash there. But anyways, I just thought that was kind of a funny question. They kind of wrote it off like Buffett's like, if the business is doing well, then there's not much reason for it to get rated. It'll just be doing well. And it's probably going to be too big anyways, kind of what he's implying. As some people seem to be worried about all of his shares coming online or going into the open market after they go to foundations and then the foundations sell or use the shares.
Well, I think it was going to be an over 10-year period to sell down the shares.
Oh, is it really? I didn't even know that.
I think Becky Quicks actually said that in asking the question.
I obviously missed it then.
10 or 12 years or something, I think, from memory.
Sure.
But I mean, you're going to have...
actually, that does ring a bell now, actually. Yeah, I don't remember being 10 to 12, but yeah, it was...
Yeah.
Maybe it was 5? But yeah, I don't know.
Hopefully
Yeah.
someone can correct us, but
Yeah,
I
yeah,
thought it
yeah.
was double digits.
Yeah.
Yeah.
That does
But I
sound
mean,
familiar now.
you
But go
would
on.
you would think for at least, I don't know, a couple decades maybe, you're gonna have one of Buffett's children at least still on the board,
Mhm.
keeping management from doing anything too crazy.
And I don't think management would be that inclined to do something crazy, and it's probably going to be the tough part will be kind of the if and when they're gone, and if any of those values degrade. I'd
Mm.
imagine you'd have kind of what a lot of megacorps go through, where they maybe take on a bunch of debt to do a big acquisition that isn't really in their wheelhouse, just because they're trying to drive some returns. It ends up being a bad investment. Now they have all this debt, and now they're in kind of a hole. I can picture something like that maybe being uh, a beginning of a major decline, but they haven't shown an indication that they'd do something like that yet. Um, but that seems to be where a lot of these kind of big, really conglomerates kind of go. They just it's one or two mega deals too many, and then the diversification that someone like Peter Lynch would abhor. What
Yeah.
you might run into that. I think that would be probably the biggest long term management risk. Could just be a big bad deal or two that slow everything down, and it's just a steady decline from there. But that's
Yeah.
quite some years away, I would think, if it ever
Yeah.
happens. The chance it
And
doesn't,
and
I guess.
Berkshire's so like large and diversified, and all the businesses kind of run so independent of one another. I
Right.
think you would see the red flags before it got too gnarly,
I
probably.
would think so. Yeah. I
If
don't
you
think it would
if you're
be.
paying attention.
I don't think it would be their existing businesses. I think it would be like a big, like, new management team comes in. They want to make an impression, set the tone. They do like a silly acquisition or something that
Yeah.
might even look okay on paper, but ends up being just operationally not in their wheelhouse, or they don't have the right management in place, or whatever. Biting off more than
Yeah.
they can chew, I guess, would be it. But frankly, if they probably run into antitrust concerns before a deal of that size might actually go through. They're just so big. Yeah.
Yeah, don't know. Maybe
Anyway,
they
we're
try
speculating.
maybe they try to lever up like 4-1 and buy Apple or something.
Yeah,
I
I don't know
don't
about
know.
something like that, but yeah, something along those lines. Where they
That'd be
issue a
pretty
bunch of
crazy.
debt and then buy some giant business, or merge, or do a partnership or something, and it just ends up being a mess. Um,
Yeah.
yeah, we'll see. Yeah, very very speculative. What else from the
Yeah.
Q&A
I,
section?
I, I think of all companies where you need to worry about management, like Berkshire is kind of high on the
I'm not
list.
worried about it. Don't get me
Yeah.
wrong. I'm just
Yeah.
picturing like what could a a more likely bad result be than
Mm.
something ridiculous like, I don't know, fraud or something like
Yeah.
that, or
Yeah.
whatever. I can see something like that happening, but a lot can happen in business. And we get a super chat from Luis for next year's meetup. Excellent. We're getting the fun going early. And appreciate it as always. Uh, people were pleased that we bought a few appetizers with our little fund, and people seem to like
That's
that.
good.
So we'll
Nice.
buy some more stuff next year if we get enough. So, but
Mm.
appreciate it, Luis, and to everyone who makes super chats and generous donations throughout. Helps us stay afloat. So we don't have that Berkshire cash flow here on Punch Card Investing.
Mm.
What else from the meeting? Trying to think of some other things that they spent some good time on. So we were kind of talking about management. Maybe we could talk more about that. Just the relatively decentralized model they have, where they kind of let managers do what they do. I found it funny when Buffett got he got a pretty hard hitting question about, like, I think it was about BNSF and like preventing derailments and catastrophes and that sort of thing. And the question was like kind of accusational, like, hey, what are you doing about this? Like, it's awful when stuff like this happens. Like, how do you prevent this from happening in the future? And like, instead of answering it, he just immediately pointed to Greg. He's like, Greg, how about you? Like, I mean, he didn't want to answer it, which I thought was a little bit funny, because it normally seems like he's kind of like, when he gets questions about individual business operations, he'll often kind of be like, "Oh, we got management in place to handle that," because he's probably not doing anything day to day. He's just kind of makes the initial capital allocation decision, and then management takes it over from there. It's obviously what's worked so well for Berkshire, but it kind of works that way in some of the questions too. Just kind of dish it out to whoever his
It is always
deputy
quite.
is. Yeah.
It is still always quite impressive how well he knows all the businesses at Berkshire.
At
Like
least
he must just be getting a constant flow of data coming at him, even if he's not making changes in the business.
Well, yeah, I mean, because he's into it. Like I mentioned the 1932 GM report. If he's reading that, I assume he's reading his own company reports too.
Yes.
You would think if he's getting to that level of company reports, I think there's a lot he'd get through before that. But maybe I'm wrong.
Yeah.
But yeah, you are right. The way he can speak about really beyond just basic strategy, but gets kind of into the weeds on maybe a specific move. Certainly for the big ones. Speaking of all the companies, I guess I didn't really know what to expect at the actual meeting itself, where they had it's basically like a trade show of all their brands. And you got See's Candy, Fruit of the Loom, Dairy Queen stands everywhere. It was just kind of a funny thing.
You didn't buy some new underwear from Fruit of the Loom?
No, but there was a massive line there on the way out when I guess all the other when I went in the morning, I just kind of walked around just to see what it was all about. Bought a little bit of See's Candy, of course, and a book. They got a lot of great book selection there, which was nice.
Which one? What did you buy?
I bought Persuasion by Cialdini. I've been wanting to get some of his books recently, so I was like, all right, I'll get that one.
I saw they even had a book stand at the airport.
Yeah, they had a tailored book stand. I took a picture of it for you.
Book stand.
Yeah, it was mostly some classic investing books, and then it was all investing books, and then Gun, Germs, and Steel. It was that was the list of all the books.
That's a manga recommendation from a few years back, I think.
Yeah, and a lot of I think a lot of investors for some reason are really into that one specifically. It is a good book though, but it was probably the best airport lineup I've ever seen for books.
Yeah. Sorry, I derailed you there on the
yeah.
all the businesses.
Yeah, it's just it's crazy. It's like a big trade show. But yeah, the Fruit of the Loom line when they were closing up everything was probably 50 to 100 people long. It was going out the store. I'm like, man, people just want their discounted underwear, I guess. But all the brands there, it just puts it in. It also helps put it into perspective how many brands they have, and that's really just more the consumer focused ones. I mean, they had a BSNF thing and a NetJets thing as well, but just all the consumer brands: Pampered Chef,
Forest River with the RVs.
The RVs, and I forget what's the modular home one as well. They had it was a manufactured home, I should say.
Clayton Homes.
I think so. I forget. But they had that set up there too. Yeah, just kind of crazy. This is all under one umbrella.
Yeah.
And Matt says it's Clayton, so we'll confirm it. So that was impressive in itself. Just this little basically trade show of Berkshire brands, and naturally lots of sweets, candy. They're giving out Coke and bag pastry things and cakes as your snacks. Naturally, only the best.
Yes.
for this crowd. Maybe that's the secret. That's the secret to longevity is making sure you sip some Coke every day and eat a bag of candy.
And
keeps the doctor away.
Use your brain a lot.
And then just read. You're fueling the brain with a bunch of sugar. That must be it. They're burning it. That's how they're able to sustain. Not medical advice. Luis says, hopefully a punch card investing booth next year. Cool. Yeah, we'd have to get acquired. We gotta make ourselves ready. Clean up the books a bit. So maybe we can get acquired by Berkshire. I think we're big enough to be in their universe of opportunities.
Of course, yeah.
What else from the anything else from Berkshire this year?
What else?
There's so much there, it's like overwhelming.
Yeah. I again found the reinsurance thing that Ajit Jain talked about a little bit quite interesting, with the whole 30-second phone call to Buffett to make sure we can risk an extra couple billion.
The way they throw around billions is just wild. Like, Buffett's like, yeah, this was 5 billion. We're making 5 billion now, and that was 15 billion. It's just like it's just a different level.
Yeah, but he said their like super catastrophe portfolio is like 50 to 60% bigger, 50% bigger in the last 5 or 6 months.
Was it
pretty crazy? They've written a lot of
Was it?
business. Yeah,
Did they say 50? I
thought that's what they said. Yeah, up 50% in 5 or 6 months.
Yeah, it was much bigger though, but yeah.
Yeah, so they said in aggregate they could lose $15 billion potentially.
I remember that. Yeah.
Yeah, if there's no losses, they didn't really give specific numbers. They just said they'll make several billion.
Did you catch the point where they were talking? Sorry to interrupt, but on insurance, where Jane was like, what was it? He was talking about, I think GM or one of the big auto manufacturers that's like trying to do insurance, and he's like, yeah, they said they're trying to do X billion in income from that or whatever it was. I don't know where they're getting that number, and he's just basically just like writing it off like it's BS. Like you're just making up that number. That was pretty funny when they're talking about the threat of direct insurance from these manufacturers. And he's kind of like, I mean, they've tried this before. It's not like it's a new thing, and I don't know where they're pulling these numbers out of a hat. It's kind of what he's implying.
Yeah, and Ajit Jain's not the first person I've heard with that perspective as well. So
who else?
Yeah, Bloomstrand, Chris Bloomstrand.
Sure.
Yeah, but he's very much in the Berkshire universe as well. I think that was specifically around Tesla's insurance business.
Yeah, maybe so.
Or at least it might have been ARC's projections of how big.
That sounds more like it. That sounds more like it.
Yeah, but it's super interesting, man. Like the Berkshire is a really weird insurer. I think Munger mentioned in the meeting they have like 4 times the capital of the average, like relative to the average competitor, because they have all these other operating businesses and the stock portfolio and everything. And they're just quite unusual in the nature to where they're very price sensitive. So if they're, being paid appropriately or being paid really well for the risks that they perceive they're taking when they, write this insurance business, they'll just write a ton of it. And when they're not getting paid appropriately, they'll just back way off and write like next to none.
They're value investors for insurance too.
Yeah, essentially. Yeah, I think it was the Science of Hitting Investing on Twitter put up a chart of Berkshire's reinsurance volume over the years, and it's just all over the place, like crazy fluctuations.
Buy low, sell high.
Yep, yeah, basically.
But for insurance.
And I'm fairly sure, again, this might have been in one of the Buffett letters I've gone through recently, but I'm fairly sure they must have incentive structures set up with their staff in the reinsurance business to where they're not incentivized at all to write extra premium volume. It's all around profitability. And they try to make a point of, not laying people off when insurance volumes are way down. And they have the capacity to bounce back massively when prices are good. So it's just a really weird approach to that business that not a lot of people can take. Like if you imagine like if that insurance company was just a standalone business trading in the stock market, like how much flack they would get from analysts for their results just being like wildly all over the place, and like being super exposed to Florida. I think Ajit Jain said, just running really weird portfolios that fluctuate.
I think the weirdness just comes from the size. I think you were kind of getting at that. It's just there aren't any other, what are they, like $500 billion market cap or something like that? 400,
like 700, I think.
Is it 700? Well, whatever. It's a lot. There aren't many companies in the world that are that big, let alone an insurer. So I think it might just be in the nature of being large with a diversified business portfolio that, if you had another insurer that was that size and had other underlying businesses, I'd assume they'd behave pretty similarly because they don't need the money in a year where they're not getting a lot of reward for their insurance.
Yep.
Whereas Berkshire, they could be like, all right, no need to do it because we got the operating businesses, like you were saying. I think it's just more because of their size, which is the actual unusual part because there aren't that many that big of businesses.
Yeah, so 708 billion is Berkshire's market cap at the moment.
It's really 700. For some reason, I was thinking 500. Wow, is that all?
That is all.
And
on the road to $1 trillion.
Yeah. Well, then, even if they just kind of maintain from here, like a little bit of printing here and there, a little bit of multiple expansion for whatever reason, people get euphoric.
Yeah.
Boom, you're right there.
Yeah. Well, well, they just reported 8 billion in operating earnings for the quarter. Like, I don't know how seasonal that is, but if they just sat around for a few years, they'd have 300 billion in cash, and that'd get them to the $1 trillion market cap. Like, they don't have to do anything particularly intelligent.
Yeah. The only thing that would crush it would be like Apple, like losing half its market cap or something.
That was interesting. The whole thing about, hey guys, Apple's a third of your portfolio, and
what
Buffett
about
just been like,
you go ahead.
They got a question about basically the diversification concentration thing, and they said Apple's like 40% or half of your portfolio, whatever percent it is. And Buffett was just kind of like, no, it's not. Like, our portfolio includes See's Candies and the railroad and Berkshire Hathaway Energy.
All the private businesses, right? Yeah.
So that was interesting, and I forget exactly what Munger said, but he said something witty about how the guy asking the questions a moron or something.
I don't remember that one. I just remember Buffett talking about how Apple, is. I think he was kind of harping on the point he's made before. How it's not really a tech company to him. It's a consumer staple of sorts. That's not exactly what he said. I remember saying something. Like that.
Yeah. He was like, I don't know how the phone works, but
that's what it was.
Yeah. He actually kind of said the same thing about the oil investments. He's like, Charlie understands.
Charlie's the oil guy
than me.
Right.
He's like, I understand the numbers behind it, but I don't really get how it works. Like, but still, he's comfortable making the investment, obviously. So.
Yeah. Right.
Mm.
We've
got a good comments about the insurance business here. Sounds like
from
Kevin. Sounds like Kevin, we're reasonably on track there.
This is correct. Insurance incentives are only to write profitable insurance. No penalties or layoffs if they don't write till decent rates return.
There you go.
So they're set up well for that. But I think, like you said, it's because they've taken the pressure off of themselves as insurers because they have all these other things that can float them through the bad times, including the float.
Exactly. Yeah, and they can insure weird stuff like in enormous size, and they're always going to be able to pay you if you need to claim on one of your very, very large insurance policies. Definitely an advantage Berkshire has.
Kevin made another point about. He said that Munger says that. Talking about diversification, I do remember Munger saying something along the lines of, I'd rather be even more concentrated or something like that. If it's a great business, just hold it. Like that's all you should go into the. I'm badly paraphrasing this, but I think they're both talking about how you want to go for those businesses that you like and understand and that are quality, and just concentrate into those. Like, don't get distracted by diversification. That's what they were implying. It's along those same lines.
Just on large weird risks in their insurance business.
Sure.
Again, because I've been reading about this recently. This is from the 1995 letter. Ajit agreed to insure the life of Mike Tyson for a sum that is large initially and that fight by fight gradually declines to zero over the next few years. So they're willing to do super unusual stuff like that, which is pretty cool.
They made sure to highlight it.
Yes.
I wonder if that It's like good marketing. And you say, hey, we insure Mike Tyson.
Yeah.
Oh, they insure him, they'll insure me. Let's see what they got.
Mm-hmm. Yep.
Get some more applications. Cool. Any final thoughts before we wrap up?
Yeah, there's lots of takeaways. I see Luis has got a question there on Oxy. I'm not sure if we want to add anything further to that.
Thoughts about him not taking control of Oxy? Not sure. I mean, we kind of mentioned it. I don't know if I have anything to add. It's kind of whether they want to control it or not. They probably could if they wanted to, but maybe they will in the future. Maybe this is a feeler deal for them.
Mm-hmm.
I mean, it's still significant for their portfolio, but what have they done with oil companies in the past? Have they? I'm thinking the most recent one, but this was gas, right? It was Dominion Energy when they bought like all the natural gas assets, right?
They bought some pipelines, I think, or maybe.
I thought it was just the natural gas segment or something. It was one segment of Dominion that they bought in one swing. Maybe it was pipeline. It was a couple of years ago now, right? But anyways, the reason I'm asking is like, I don't know if they've done that before where they kind of, they buy in, they wait a second and they make a swing and buy the whole thing later. That might be a little bit weird, but.
Yeah, they bought Dominion Energy's natural gas transmission and storage business.
That's what it was. Yeah, it was the gas.
Yeah, I'm not sure what the
gas pipelines.
Yeah, I'm not sure what the economics look like for pipelines versus buying the actual commodity business. I don't know enough about it.
It's probably even arguably better, or at least more predictable, because you're kind of the toll bridge.
I would think so, but yeah.
I'd assume it's less volatile, but I don't know. I'm no expert.
Yeah, natural gas is like as volatile as it gets, I think. Yeah. But maybe the pipeline's less so. I'm not sure.
Yeah. Those are hard to replace because they have to be so large. And if you get a good network going, you got a real asset there. So
yeah, but Oxy earnings just came out actually. I'm going to release a video on it in a couple of days, but they've continued to repurchase shares, and Berkshire, if you include the warrants that they have that they can exercise it, I think it was like $59 per share. If you include the warrants alongside the common stock, they own over 33% of Oxy now. So it's getting pretty crazy how much of that business they own. But
it's a big chunk for a big business too. It's not like it was small.
Yeah, I know Monish Pabrai in a talk recently kind of speculated that they'd probably like to own Oxy if they could control the capital allocation and everything, but sounds like maybe not. I think they like the capital allocation anyway, like they're paying down debt, buying back shares.
Yeah, I was going to say maybe they don't align with something on management, but then why would they be investing so heavily into it, if they weren't happy with it? So
yeah, and they had a lot of praise for the management.
Yeah. So I don't know. I don't know what the holdup would really be, unless it's just a regulatory concern. They don't want to waste time making an offer and then it's blocked, or shareholders get a chance to vote on it and all that, and maybe something having to do with that, just because it'd be such a large deal.
Yeah, don't know. I guess it is the type of business where the economics can change so fast with commodity prices, or even with technology, like if they can find cheaper and more efficient ways to get oil out of the ground, that can crash the price and change things. So maybe Buffett wants the option to be able to get out if he has to. I don't really know. It's not a very Buffett-y thing to do, really.
Yeah, that'd be quite the trade. It's a lot of billions for that trade. Yeah.
Yep.
But they don't like talking about their individual stock holdings, which I find kind of funny. They're very, whenever they don't have to say something, they just don't. It's for most of the time. It's pretty funny.
Yeah. Any
cool.
final takeaways from you, Jack?
It's a good weekend. Looking forward to next year's. Ideally, Charlie will be 100, and he'll be there. That'll be really cool.
Mm.
But, how many 100-year-old how many 100-year-olds have run 30,000 person board meetings? Like that'd be pretty impressive. Or it's not board meeting, but annual report meetings. That would be
Yeah.
pretty cool. So,
Mm.
but either way, I definitely want to go just because this year's was so good. Could finally maybe meet you in person, Tom, if you're there as well. So,
Yes.
a double incentive to get going. If I don't get down to New Zealand for some reason before then,
Yeah.
or at least close by. Uh,
Mm.
but, or if you don't stumble your way up to the States again before then for some odd reason and abandon your young child at home. But yeah, really looking forward to next year's because this year's was quite good and met a lot of good people and definitely want to keep those connections up now. And yeah, just overall very positive experience. And I think next year's will be even better now that I kind of know what's going on.
What would you say to anyone listening or watching that's like on the fence thinking about going next year, whether they should go or not?
I think first off, if you can sacrifice the weekend, go for it. But first, I'll give some tips. Book early. Like as soon as you know what the date is. This hotel and flight prices didn't really spike until about probably a month after the meeting had already been announced. The meeting date had already been announced. So once you know
The
it,
date must be announced already, right? Isn't it usually like I think last year it was like on the back of
what
the
was it?
program. Yeah.
Okay, well, if so, get something reserved. You can reserve a lot of hotels without putting any money down. So I would go ahead and do that now because like they spike like in the few months leading up to it. So check that out. Louis says May 4th, so maybe it is already up. So yeah, I would get that reserved now if you're thinking about going. But anyways, if you're on the fence about going, first get it reserved so you have your spot. You don't have to think about it later if prices go up. But it's a very unique experience. I've never been at anything quite of this scale like that. I've been to like some conventions and things, but this one is just huge, and it's all investor people. And if you're into this sort of stuff that we do here on Punch Card or that we do on our individual channels as well, then I think you'll definitely enjoy it. If you like business, if you like investing, we had a couple 17-year-olds at our Punch Card meetup. They were super into it, and just like you get high energy people like that, I wasn't doing any of that sort of thing in high school. I doubt you were as well, Tom, coming to Berkshire and Hathaway annual meetings, and actually going to events and meeting people. But it's just very eye-opening to see how many people have similar, not the same, but similar perspectives on things. And you can learn a lot from those people who are kind of in and around the area where you might be trying to go or that you're curious about. There's a lot of people that you can learn from there. So a lot of people just trying to learn, and yeah, that's all I'll say. If you're trying to learn, it's a good place. You'll probably meet a few people that you can stay connected with after the fact, thanks to great things like the internet. So yeah, definitely a great time. And that's all I'll say. You got any words of wisdom there?
No, it's zero regrets about going last year. Wish I could have made it this year, but
you got a way bigger trip. So that means more coming from Tom.
That's what I was gonna say. Yeah, like you're way closer than me.
2-hour flight. I'm there as long as I
I'll
make the flight. It's 2 hours.
Yes, that is crucial. But yeah, no, distance is no object at this. These days,
so if you're in the States, not much of an excuse, I will say. If it's just a weekend, you show up on the Friday. If you can show up on the Thursday, great. But show up on the Friday, leave Sunday night or Monday, whatever you can do. I found that the flights are, or at least they were, significantly cheaper on Monday, and you can actually get a cheap hotel Sunday or I should say a nice hotel much cheaper on Sunday and save money on the flight if you're able to burn a day. But so I that's what I did on Monday. I just filmed a bunch of content in the morning and met someone for lunch. So saved a few $100 right there and got some good content in. So nice. At least I think it's decent content, at least. It's good to articulate some things. But yeah, so if you're in the States, definitely give it a whirl if you haven't.
And if you're on Earth, still no excuse.
So, yeah, There are some excuses, though it's very small. Yeah, May 4th next year apparently. So I'm gonna actually go ahead and reserve. I'm gonna go ahead and reserve something right now, so I don't forget. So at least have something there just as a backup. If I want to change my mind later, I can, but at least I'll have something at a theoretically reasonable price before it's all booked up. But alrighty, Tom. Anything else?
Nothing to add.
Great. Well, if you made it this far, why don't you go ahead and hit the like button? Why don't you go ahead and subscribe as well if you haven't done that? Helps us out a lot. Make sure you don't miss next week's episode when we do that. And we do all of our episodes. We try to do it every week. I know it's been a bit spotty since daylight savings time, but trying to get back to the weekly cadence again. And we might have some new guests coming on to the show as well. So any recommendations there who we should reach out to, perhaps, go ahead and let us know in the comments below. But before you do that, do be sure to check out all the great stuff in the description as well, including those discount links to Seeking Alpha and ShareSite. Where you can get discounts on their services. You can also sign up for the free versions first. Just be sure to use our link. So if you do end up switching to a premium plan, we might get a small commission. And that will go a long way towards paying for the next Berkshire Hathaway annual meeting next year when we do our meetup. But with that said, everyone, till next time.
Thanks for tuning in to Punch Card Investing. The contents of this show should not be used as investment advice or as a recommendation to invest in a particular security. Please consult with a licensed investment advisor if you need investment advice. All investments carry risk and the potential for monetary loss. Thank you, and see you next week.